Hello traders, this is Blake Morrow with Forex Analytics and you're listening to the week ahead video for July 28th, 2024. I hope you guys are all having a great weekend. As you can see, there is a lot happening this week. There's a lot of key events. I mean, between the jobs report, three central banks, and the volatility that we're seeing in the market, things are only going to get crazier. This is probably going to be one of the busiest weeks of the summer happening this week. And this is before, a lot of traders head off for the August month for holidays. So it should be chock full of volatility. Now, I'm going to get into that all here in 1 second, but I want to talk about a couple of things that are happening right now. Let's start with what's happening on later on this week on the 1st, which will be on the F.A.C.E show. Now, if you don't know how to get to our F.A.C.E show, it's free. Just go to forexanalytics.com, go to webinars. You can actually click down below. There's a link there where you can get to the Flow show or the F.A.C.E show. Now, on the F.A.C.E show on the 1st, which is going to be Thursday, we didn't want to do it on Friday because of jobs report. We always do those. We cover that data live. But we're going to have an interview with a few of the traders from the Gelber Group. Now, the Gelber Group is a large proprietary firm, a prop firm here it's in New York, in Chicago, and they have an office in Europe. If you're familiar with the name Gelber, you probably recognize him from the original Market Wizards book. This is his proprietary firm where they have offices, and their offices look like, let me see. You can probably see what their offices look like. Looks like this, right? Very similar to the trading operation that I traded at in Greenwich, Connecticut, and in Florida for many years. Very similar type of situation. They are actually hosting an event where you can win cash prizes up to $20,000 for the first cash prize, but they're looking for traders from our community. Now, you have to be a U.S. resident in this first round. And I say that because if this is successful, they hope to be able to do more worldwide, but it's called the Breakout. And they're going to actually, they're taking applications. It's free. It's free for you to apply, and it's free to participate. And if you're in the trader funding program, what we do here at Forex Analytics is it's a virtual prop firm, if you will. If you're trading with the trader funding program, it's fine. You could do them together. But we're going to bring this group in on Monday or on Thursday, the 1st. They're going to talk to you right after the F.A.C.E show and tell you a little bit more about what they do and what the breakout is. But basically what they are really doing is they are going to be looking at, all their applicants. They're going to select, they're not sure how many, 20 to maybe 30 or 40. And then from those 20 or 30 or 40, they're going to compete for these cash prizes. Now, you don't even have to win the cash to be able to join their group because they're going to be studying how you trade, how you risk manage, and how you grind out the markets. Just what we do at Trader Funding Program, but they're going to be looking through your trades with a fine-tooth comb. So it's a really exciting opportunity. Make sure you're on the F.A.C.E show on what day? The 1st at 8:30 a.m. Eastern. Okay, also, like I was mentioning about Trader Funding Program, remember, you just have a few more days. If you want to go through the Trader Funding Program assessment, you have just a few more days to get a one-on-one consultation with me. I did it for the month of July because I think it's a great benefit for our traders to be able to know what tools they have, know how to get to the community. I can give you some tips that and some of the things that I use to pass assessments. So make sure you take advantage of the Trader Funding Program, and you don't have to be just in the US. You can be anywhere. So take advantage of that. Now, we have a lot of stuff to talk about this week, and what I wanted to talk about really just to start off is the yen and how I traded the yen, but more importantly, what I'm going to be doing with the yen this week. This week is a very important week, and this is going to be some detailed analysis of the yen. So if you recall, and by the way, you guys know every single week I give you the 3 best setups of the week. I review the previous weeks. Well, one of the setups this week was to sell the dollar yen on a move to 155, 158 to 158.50. We came really damn close. You guys know I was short. I mean, I told you I'm short already, but this is could be a fresh opportunity. Hopefully you guys took advantage of it, because you can see the huge move down in the dollar yen. I mean, it lost 3.5% this week from top to bottom. If you were in the Forex Analytics chat room, here's the Forex Analytics chat room. If you were in the trades room, you probably watched me all week, close out my euro yen shorts, my dollar yen shorts, all the positions that I had in the yen. Turn around, I went long the US dollar Japanese yen, at 152 and 152.30, I think is where I bought it. My average was, and I got out above 154. So, and that was Friday with the Aussie yen. But I'm gonna talk a little bit about that, because I had a trader who came up to me and said, Blake, you really crushed it in the yen, and I did well, but I could have done better, because for those of you that know me as a trader, a lot of times what I do is I will put out feelers in the market. I'll take smaller positions, just because what it does is it draws my attention to that asset specifically. Like, for example, if I know I want to short the yen, I might short maybe a quarter size position, and I'll just sit in it, because whether I make or lose money on a quarter size position, it's not a lot of money. I'm not going to make a ton. I'm not going to lose a ton. But it really helps me focus on that asset class, because I can sit there and watch the P&L. I can watch the pips up and down, and it always turns my attention to that. So the reason why I tell you that is because I've been short the euro yen, the dollar yen, some other yen pairs really over the last month and a half, but in really small slivers. So of course, when you're doing that, not only am I kind of finessing through a trade, up a little, down a little, up a little, lose a little, add on, make a little. I'm paying carry interest, because the yen is a carry trade. So I'm paying that interest every single day, even though it's small, every day. And it adds up over the course of a month. It does. So the swoon lower that we saw in the yen pairs, I was aggressively shorting on the way down. So there's that. And as I told our traders in our community, look, I did really well, but I was early. I was like a month early, and just kind of, because I was expecting that to happen, but it eventually happened. And once it broke, I really got aggressive. And some of you would ask, well, Blake, if you knew it was going to break down, why didn't you just sell it when it broke down? Again, one of the reasons why I keep small trackers sometimes in the market, especially on what I think is going to be a big trade, is because it really draws my attention every single day, almost minute by minute, to that asset class until that happens. And once it happens, then I take advantage of it. If I wasn't paying such close attention, I might have missed the trade, and I might have missed a big portion of it. And so that's how I navigate through these longer term positions. But yeah, I did really well in the yen, and I hope you did too, because it was a hell of a call last week. If you watched last week's week ahead video, hopefully you did really well. Anyway, I just want to walk you through the yen. I'm going to tell you how I'm going to trade the yen when we talk about the BOJ coming up in just a few minutes. So stick around for that, of course. All right. Also, I just want to say a couple other things that are happening this week. We have some earnings from McDonald's, Microsoft, Meta or Facebook, Qualcomm, Apple, Amazon, and so many more companies. And once again, we have the BOJ, Bank of England, FOMC, and Non-Farm Payroll. All right, let's get to everything that's happening throughout the course of the week. And remember, you can follow along right here on Forex Analytics. One of the benefits of having Forex Analytics is not only do you have all this analysis for 30 different instruments, not just currencies. You can see there's metals, there's indices, there's the DAX, there's notes, boons, crypto. There's a lot of different asset classes here, and you have several different analysis types. you can go through, but you also have a live squawk feed that is running all the time. Well, when live squawk is running, you have a live calendar, you have a risk management tool, which I use quite a bit. If you watch our private shows that we do on the Morning Edge and Daily Roundup, you know I use this risk management calculator all the time, calculating how much risk I'm willing to take in any one trade. And you got patterns in play. You can see different trades that we're taking, you know, when we close them, when we open them, why, and what we were looking at, what the pattern was when we saw it. All that information is right here for you on Forex Analytics. So make sure you're using all the tools that you have available to you. But we're going to use the charts that I draw on every week here on the show. So Monday, we have McDonald's earnings, nothing really else on Monday. So look, it is a 5-day trading week. If you want to take a day off, Monday might be the day because the rest of the week is going to be berserko. All right. So Monday night, there's nothing really happening in Asia either going into Tuesday morning. But Tuesday morning in North America, we're going to have Mexican GDP. Now, I want to talk a little bit about the dollar MEX because it has rallied back. And let me show you, we have a bull flag pattern. But this was also one of the setups from this week. I'll tell you this. I was long dollar MEX. I got out at, I want to say, if my number is correct, I got out around 1842 because 1847 was a 618 retracement. Let me show you what I mean by that. You can see it right here in red. Let me get rid of this fib level. You can see we hit the 618 retracement. Now, currently, and if you read the analysis from Forex Analytics, you'll see in the 4-hour chart, I'm actually looking at it as more of a triangle now, or a potential pennant. So the way I'm viewing it at this stage in the game is something that looks more like this. And this is what I think is happening right now. Now, if this is truly the case and the dollar Mexican peso is truly developing some sort of pennant, or, you know, which could look like this, it could also look like this. Let me just draw it out for you guys. Could look like that. If the dollar MEX is building some sort of pennant like that, that means that that it's, you know, stocks might actually recover because it will trade very inversely to the stock market just in general, like risk appetite. So the dollar MEX, if it comes back down, you know, from here, that would mean that the S&P is probably going to continue to rally or at least recover from this week's sell-off. We'll see. But on Tuesday, we have Mexican GDP. Also on Tuesday, we have U.S. consumer confidence, JOLTS, Case Shiller House Price Index, and we have earnings from Microsoft, AMD, Merck, Pfizer. So a lot happening on Tuesday. And the JOLTS job data is going to be really important. And I want to show you, well, no, never mind. I was going to go to the dollar index, but I'm going to save that for the FOMC, okay? So Tuesday night, now Wednesday morning in Australia, is going to be the Aussie CPI and retail sales, both at the same time, which I think is really, whoops, I wanted to end that. Sorry, guys. Let me get rid of that really quick. We have Aussie CPI and retail sales being released at the same time. Now, we should be focusing on the Aussie because, and I'm going to show you, this is such an aggressive move. It's been a while since we looked at the Aussie, obviously, last couple of weeks. But I want to show you what has happened because this is really, really important. Now, take a look at the entire move of the Aussie. Now, if you look at this low that was on April 24th to the high, you'll notice that we stopped at the 618. You guys see that, right? Now, if you take this low right here, back in June, to this high, you'll notice that that is a 127% extension, right? So what does that tell you about the Aussie? It's really, really critical support. And frankly, if this level breaks, then that opens the door for a move, you know, down towards 64 cents. But remember, Tuesday night, there's CPI and retail sales. And this is truly what could keep the RBA in possible rate hike territory. If CPI comes in hot and retail sales comes in hot, the expectations for an RBA hike in the next meeting increase dramatically, which they're already there. There's this, it's one of those, you think about central banks, there are only two central banks. Well, one that's more than likely going to raise rates could be this week, would be the BOJ. And after that, it's the RBA. So is the Aussie dollar right now mispriced down at this level? Well, probably has more to do with the data that comes out Tuesday night or Wednesday morning if you live in Australia. So keep a very close eye on the Aussie dollar this week. We have China PMIs also Wednesday morning in China. And then, okay, now we're going to talk about the US dollar Japanese yen. Go back to this. And we're going to have to do a little bit of drawing here because the BOJ is meeting Wednesday morning. Now, their announcement usually happens somewhere around noon Tokyo time. So you guys have to figure out, what time that is where you live. But let's just take this fib level. Let's pull it down to here. And now let's look at what the 38% retracement is at. It's 155.80, right? 155.80 also happens to correspond with these lows and this low right here. So you can see this is a very key resistance zone ahead of the BOJ. Now this is what I'm hoping to do. And I want you guys, I want you to put your thinking caps on really quick. Sorry, it's when I close my doors and I turn the studio lights on and it's 115 degrees here. It's not that bad, but it's humid actually. So if I look like I'm sweating, I am. It's hot. I want you to put your thinking caps on really fast. The stock market looked like it found some sort of low on Friday. All right. If you look at the S&P here, let's add the S&P to the to this really quick. You can see the stock market found some buyers. It's the turquoise line right here. Found some buyers at the end of the week. Now, I think the S&P, because we stopped at the 38% retracement of this entire move here. You can see this entire move. If you drew a fib on it, this low right here. Whoops. Let me grab this drawing tool. This was a 38% retracement. Okay. So if the stock market continues to recover early next week, which I think it will, the US dollar Japanese yen could continue to recover towards that 155 level. Now, what are we expecting from the BOJ? Well, there are more than 50% of economists expect that the BOJ is going to move on interest rates. The question is what are they going to move? Another 10 basis points? Or will they go 25? They actually start normalizing rates like a real central bank. Yeah, I called you a real central bank, not a real central bank, BOJ. But that's the question, right? If they do raise by 10 basis points, my guesstimate would be that the yen will strengthen. And they're also going to be talking about, maybe decreasing the rate of JGBs as well. If that is truly the case, the US dollar Japanese yen would probably strengthen, or the yen would strengthen, US dollar Japanese yen would weaken. We'd probably come back towards 152. Now, let's say the BOJ mans up a little bit and they actually raise rates like a normal central bank by 25 basis points. There's a good chance that we actually break 152. All right. So what am I trying to tell you? I'm looking to sell the dollar yen at higher levels than where we're currently at ahead of the BOJ. So what I'm trying to do is I'm trying to short the dollar yen somewhere up here. Now, what else happens right the very next day on Wednesday? The Fed, right? Now, there's very little chance that the Fed is going to raise rates, or cut rates. But what if they did? The US dollar Japanese yen could literally be trading at 147 next week. Now, the chances of them doing that is probably this big, this much, right? Something like that, but very little. but there's a good chance they could lean in kind of dovishly if they talk about how weak the data has been as of late. Now, I know the GDP numbers, the advanced GDP numbers were decent that we saw this last week, but the Fed looks at more than just the headline numbers. They're looking at a lot of metrics, and they have economists, staff economists, they're looking at all sorts of metrics, way more than what we see. And if they lean dovish and the BOJ has raised rates a little bit more aggressively, that could be another recipe for the dollar yen to really be trading below 152 by the end of next week. So what I'm trying to tell you is I am looking to sell the dollar yen ahead of the BOJ somewhere up in the 155 level, give or take. I'd like to see a little bit more than that, but that's what I'm looking to do, ahead of the FOMC and ahead of the BOJ. I hope that helps you guys out thinking about things, framing things for this next week. It's a big one, guys. It's a big one. All right. Continuing on with what else is happening on Tuesday, well, Wednesday. We have Eurozone CPI. Let's take a look at the euro really quick. The euro is a really a big one for me because we are in obviously a huge triangle. You guys can all see that, right? But let's just talk about this really fast. Do you notice how the pullback in the euro's been limited to a 38% retracement? That means it's a very shallow pullback thus far. From low to high, 38% retracement. So that argues that we could stay pretty well bid here. So now I don't think Eurozone CPI is what's going to move the needle. I do believe it's going to be later that morning when we're talking about the Fed. But we also have, not only do we have the Fed, we have ADP on Wednesday. We do have Canadian GDP, by the way. We have US ECI, which is employment cost index. So that's another inflation gauge that the market's looking at. We have pending home sales and Chicago PMI. We also have earnings from Facebook, Qualcomm, and your favorite plane manufacturer and mine, Boeing. Yeah. On Thursday, we have the Bank of England rate decision. Now, the BOE, this is a scary chart, guys. If you are long sterling because you saw a big, oops, that's not it. This is still a scary chart. If you're long sterling because you saw this big breakout, let me delete some of this stuff really fast. You saw this big breakout here. We are below the breakout point in cable, right? So that's a little scary. We rejected the 161% extension. We have a false breakout right now. And we have to be careful with the Bank of England, especially if you are bullish sterling. So let's figure out where our pullback points are. Okay. You can see there, the 618 probably comes in, what is it, 127.75. That's probably going to be a pretty key level. I would say somewhere right down around here is going to be a key support. So for those of you that are trading, sterling, that's going to be probably your bull bear line, meaning as long as you're above 127.75, I think you can stay bullish-ish, constructive. You start getting below 127.75, and that's where things turn bearish. Now keep in mind when you're talking about the Bank of England, no one's I say no one. Everyone is expecting, majority is expecting the Bank of England to cut rates. So there's a good chance that if they cut rates, it could end up being more of a one and done type of communication. And if that is the case, and you see the votes reflect that in the MPC, you could get a pullback to 127.75, but then a bounce, right? So just keep that in mind when we're talking about sterling. All right, we have unemployment claims. Obviously, the market's looking at unemployment claims very carefully. We have ISM, and we have Apple, Amazon, and Intel. And one thing that I didn't do, I told you I was going to do, is I was going to talk about the dollar index. So this is as good time as ever as any to talk about the dollar index. So right now, the dollar index as you can see, is this is the same index that we use not only for here on the week ahead video, but I do use it during the free shows. Once again, if you don't know how to get to the free shows that we do every day, just go to our website, go to where it says webinar right there. And then you have the flow show, which Ryan Littlestone's out this week, but K-Man will be there all week hosting the flow show. Then there's the F.A.C.E show where you can see myself, Dale, K-Man this week. Ryan's usually there. Stelios will be popping in. Greg is going to be popping in this week. So make sure you're tuned in there. But the reason why I bring that up is because we draw on this chart as well. And this is the same chart that I use when I'm doing analysis on Forex Analytics. So if you are a Forex Analytics subscriber, you'll see same charts basically are coming in right here on the dollar index. And I'm looking at this as an inverted head and shoulder pattern for now. I'm going to say for now, because we're going to end up losing symmetry by the end of this week if we haven't broken out. So what I'm going to tell you really fast is a break back below 104 or 103.90 is going to be bearish. So let me just draw that out for you. Below there is going to be bearish. Above here is going to be bullish. Okay. You guys with me on that? Okay. So that's what I'm going to be looking at with the dollar index. Don't get too attached to the idea that it's setting up an inverted head and shoulder patterns and things have to go higher. That's not necessarily the case. Inverted and regular head and shoulder patterns, probably one of the most and highest failure rate in chart patterns out there. The least pattern, the pattern least likely to complete, and it's the pattern least likely to fail. So when you're looking at head and shoulder patterns, don't get carried away and make you too biased. I still see this as a break below 104 is bearish. And that's going to come out probably this week with, if it's not for the Fed, it'll probably be the jobs data on Friday. Speaking of which, moving right along, we have on Friday, we have the jobs report, and we also have Swiss CPI. I'm going to just talk about the dollar Swiss really quick. The dollar Swiss, we thought that we'd get a little breakout there, and it didn't last very long. But I want to show you what the dollar Swiss looks like longer term. So longer term, speaking of head and shoulder patterns, this is what I'm seeing with the dollar Swiss longer term. Let's go over to a daily chart. Now, if you remember back in December, January of this year, I talked about the Swiss franc being one of the trades of the year to be short. And we played it at the beginning of this year, and it played it aggressively. It was such a great trade. I'm looking to play it again on a major dip. So I am going to look for a dip down towards, 86.50, maybe down to 85.50, somewhere down there. I am going to be looking to play it on the long side. Now, will this week be the week that gets us down there? Probably not. But last week we saw a lot of yen strength, and complementary to that, we saw Swiss strength as well. So if the markets do sell off a little bit, which they did this week, the Swiss franc might gain some strength, just like the yen. They are risk safe haven type of currencies. And with the BOJ this week, if the BOJ does move a little bit more aggressive, the Swiss franc might move in sympathy. So just keep that in mind if you're trading the Swiss franc. All right, continuing on. That's it for what's happening this week. We do have, I want to go over some other markets. Let's talk about gold. And we'll talk a little bit about silver too. Gold gave us this little false breakout above the highs. We were talking about that being wave 5, and it did fail. And I've been talking to you guys about that the last couple of weeks, because that's what Jim Welsh and Gregor Horvat had been looking at from an Elliott wave perspective. And if you just look at, here, let's pull it up this way. If you look at gold and you go to Elliott wave analysis, you can see that was wave 5, right? And that's been Greg has had that on Forex Analytics for literally the last few weeks. So hopefully you weren't sucked in up there. But I will say this, that gold is holding up relatively well. We're at the 50 DMA. And if the dollar continues to weaken, which it sure as heck could, then you have to be respectful of the fact that we held the 618 retracement as well in gold. Now silver broke through support, and silver, let me just show you this. The flag pattern never played out. Let's get rid of that. Let's get rid of this. And now we have a potential Gartley pattern reversal. So if gold finds a bid, silver may find a bid as well. Now I was expecting a little bit further of a sell-off in silver to get down towards this 200 DMA, but I don't know. I have to imagine there's a lot of people trying to buy silver down at these levels too. I want to mention that copper found buyers at the 200 DMA. If you follow me via Twitter, I mentioned that we were not only getting towards the 200 DMA, but we're also reaching the pretty key retracement levels. Also, you can see a little bit of a breakout point here. So a lot of support down here in copper. Now, if stocks bounce, copper could indeed, from current levels, bounce back towards 4.25 or 430, right up here, right? That's entirely possible. All right. I also want to talk a little bit about the 10-year, because the 10-year continues to hold its breakout point. Now, with the Fed this week, there's a good chance that the 10-year will continue to move following the Fed this week. And realize that there's a lot of, you can see it right through here, a lot of moving average support between the 200 DMA and the 50 DMA, all crossing over. This is, I know we've had a couple of failed big crosses here, but that is currently what we would call a golden cross. A golden cross is when the 50 DMA crosses above the 200 DMA, and they're both crossing and angling higher. So there's a higher probability that the 10-year notes could continue to rally here. Let's talk about the S&P and the NASDAQ. I want to talk about the Russell 2000. So here's your S&P. We're going to be reviewing that here in just a few minutes, actually, because it was one of the setups from last week. But let's delete this. Let's delete this. Let's delete this. We're going to have to do a little bit of drawing here. If you take this low right here to this high, you can see we hit the 38% retracement right there at 5,400. We bounced, and now we're bouncing right into some pretty critical resistance. So let's get rid of this here. Let's get rid of this one here, and let's move that up here. Okay, so you can see we're coming up into the underside of this channel, and also a pretty big pivot. So my opinion is, what happens here is going to be very critical to whether the stock market continues higher and we retest those highs, or we get a big reversal. So I think you're going to have to take cues from other markets. Like here's the NASDAQ 100, seeing what the recovery is going to be in the NASDAQ 100. NASDAQ 100, you can also see, has found some support at the 50% retracement. The Dow finding support at the breakout point. Russell 2000 continuing to hold up and looking actually quite bullish. We're trying to break out of a pennant. That's a bullish pennant, by the way. You should really pay attention to what's. Let's just go back for a second, and let's talk about the Dow. See where it's supported. You guys all see that, right? Whoops, I didn't mean to do that. Let's go back here. Let me grab this. There you go. There, and there, right? when you're seeing a chart that looks like that or a chart that looks like this and then in the Russell 2000, it's really, really hard to sit there and look at the S&P and the NASDAQ and say, well, I'm going to get really short. I mean, you got some of these markets and some of these stocks that are acting really well. And you still have a lot of earnings this week, a lot of key earnings, especially when you're talking about Microsoft and Apple and Amazon. I mean, and Facebook or Meta. I mean, a lot of really key companies this week. So before you get too bearish equities, because I know a lot of people are thinking that we're going to see a market crash from here, or this is it, this is the sell-off, this is where it starts. Keep your eye on some of these other markets, some of these other broad indexes as well, right? I mean, you even look at like the Nikkei. The Nikkei has pulled back, but yeah, I mean, we've had a hell of a pullback, but where have we pulled back to? We've pulled back to what I would consider is pretty decent support. I mean, this is a major breakout point. You can go all the way back here at your previous all-time highs, right? We're basically congregating around it. I would argue that if we got below this level, it would become very bearish in the Nikkei. But at this point, this seems like a zone right around where we're at in the Nikkei. So don't get so aggressively bearish just yet. Why don't you wait for all indexes to turn over before doing that? And one last thing I should talk to you guys about really quick. Let's talk about crypto. Look at Bitcoin. Bitcoin is right back up to this long-term flag resistance. If this really theoretically, this is a weekly chart, guys. This could be a big cup and handle formation. I mean, if that's a cup and handle formation, you know where we're going? North of 100,000, I think, if I do the numbers correct. The measure would take us up to 115,000. So this long-term Bitcoin chart is not going higher with the stock market going lower, in my opinion, unless we have a sovereign debt crisis. Then maybe that's a different story. Stocks would go lower, and then Bitcoin would go higher. But if Bitcoin's moving higher, there's a good chance that risk appetite's moving higher as well. That means stocks are going up. Okay, now this is the point where I want to talk about the trades from last week, the setups from last week, and then I'll go into the setups for this week. But before I do that, let me mention this. If you like these videos and you find them important to you and your success, give me a thumbs up. Give the team a thumbs up. I'm still sweating. It's so hot, so hot and humid here. So it's Saturday. Jump down in the comments below if I missed something, because there's so much happening this week. Comment down below if you agree with some of my ideas, or maybe you have some ideas of your own. I'd like to hear from you because I read the comments. So anyway, big thumbs up. I'd appreciate it. And subscribe to the channel. It's free to subscribe to these YouTube channels, right? It's free to subscribe. So subscribe. If you're not subscribed, subscribe. All right. Now, also, I want to say that if you haven't tried Forex Analytics, you should do so. It's $1 for 10 days just to jump in our community. Then you can jump in the chat room with us. You can be in the general chat room and just sit here and chat with me, other traders, talk about the markets that you're seeing, all the charts, and we can debate on why things are going where they're at. And some people will agree and disagree. And this is what the markets are all about. We're just talking about what we think is going higher, what we think is going lower, and why. And then you can understand why we're talking about certain things. And having a community of traders, of like-minded people like yourself, that we don't talk politics, we don't talk religion. And it's very difficult not to talk politics at this time. But we don't do that. We're just really respectful to one another and provide commentary and trade ideas. And it's not just myself, it's a lot of great traders inside of our community that makes up. Matter of fact, there's a new trader, Brian. He just jumped in here. He's providing all sorts of commentary at the end of the week. It's awesome. I love it. So jump in the Forex Analytics community. Remember, try it out. It's $1 for 10 days. All right, let's go to the trades of last week. So last week, Now this is going to be a recap for a few things. So dollar yen, short dollar yen on rallies to 158 to 158 and a quarter. Well, I'm going to count this. Sorry, it's going to count. We went as high as 157, 70 something. I mean, within 20 pips. And then we had a 570 pip drop from there. I mean, 20 pips. I mean, after a 570 pip move, I think that was a good call. I think we can count that as a win. Do you agree? Dollar Mexican peso, buy daily close above 1810. You guys know I was already long dollar Mex. I added. We closed above 1810 and we went to 1864, I think. 60. Is that a win? Yeah, it was. That was another good one. Trade number 3. Short S&P, breakdown below 5450 and 50 DMA. So now this one is basically, I would call this probably a scratch because we closed just slightly above, but you can see we closed below the 50 DMA. It gave us a little bit of a move, but we found support at the 38% retracement and it bounced. Actually, you could call that one even, it didn't work. I mean, yeah, if you got out like on Friday at the end of the week, you lost 10 S&P points, which is peanuts, but you can call it a scratch. It didn't work. Okay. So 2 of them worked, 1 of them did not. But man, the dollar yen, I hope you got, let us know in the comments down below if you capitalized on that yen trade. I'd love to hear it. I'd love to hear it. I hope you guys did well with that. All right. So this week, guess what? The yen is back in focus for me. Trade number one for this week. Short dollar yen, I already told you. Move up towards 155 to 155.70 or a breakdown below 152 only post BOJ if the BOJ is more aggressive. Let's say they raise rates 25 basis points. I have a feeling that dollar yen will be well below 152 by FOMC day, which will be 12 hours later. But yeah. So, because the market is not expecting that. So, short dollar yen, 155. I already walked you guys through this. 155 to 155.70. That is trade setup number uno. Dos. Buy euro dollar dips while above the 50 DMA and the 200 DMA. So while we're above here, I am looking to buy dips. Now, this is a triangle, guys. And as you know, all good things like triangle ranges will eventually come to an end. I'm looking at the euro right now as a possible bull flag pattern that looks like this. Because I'm trying to figure out how this thing might actually break out. And could this week be the week that the euro dollar breaks to the upside, or at least challenges the 109.50? The answer to me is yeah. So while we're above the 50 DMA and the 200 DMA, I want to be on the long side of the euro. I am buying dips this week ahead of the Fed and ahead of the jobs report on Friday. Last but not least, the 10-year notes. The 10-year notes are in breakout territory. I believe that this week is going to be a week that we start to see we see continued weakness in U.S. economic data. So if that is truly the case and the Fed leans in a little bit more dovishly, this breakout will start to materialize. So the breakout of the 10-year notes will probably start driving towards 114-ish. And if we see a move in the 10-year like that, that means yields are coming down. That also would mean the dollar is coming down. So if you put it all together, guys and gals, then what I'm basically telling you is I'm expecting dollar weakness this week. And I just gave you several different ways to potentially play it. And if you like this video and you think it's going to prepare you for this next week, give me a thumbs up. And like I said, comment down below. And I just want to say thank you for spending your time with me. You know, out of all the things that we own, your most important asset is your time. And so because you choose to share it with me, I appreciate you. So thank you so much for sharing it with me. I'll see you guys Monday morning on the F.A.C.E show. And don't forget, Thursday, after the F.A.C.E show, I will be interviewing some traders from the Gelber Group, and they'll talk about the breakout. We'll see you guys on Monday. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.